Hello and good morning from Proactive New York. Joining me today is Jeff Szyperski, CEO at Chesapeake Financial Shares. Jeff, good to see you. How are you?
Fine, Christine. Thanks for having me today.
Jeff, the bank recently reported its year-end earnings. Talk to me about the highlights for you. It was a record year for you.
It was a remarkable year, Christine. We finished slightly over 15 million in net income, which is by far our biggest record. It was a 27, almost 28% increase over the prior year, which was also a record year. So it was a tremendous year for us. It was definitely bolstered by Paycheck Protection Program fees that we recognized into income in 2021, which obviously is a non-recurring income item. So 2022 looking forward is a slightly different picture, even though we're still very optimistic.
Yeah, what do you mean by that? Is that because the PPP loans are no more?
Yeah, we're taking about what we recognize roughly about 3 million in PPP fees in 2021. And that is, like I mentioned, is non-recurring. So our projections for 2022 are slightly less than the record 15 million, but it's a more normalized net income for us. It's still very strong. I look at 2022 for the banking industry as really a wheat from the chaff year. It's depending on what the Fed does with rate increases, it's going to be a grinded out year for us and a lot of banks across the country. Luckily, we have a fair amount of fee income from our three special purpose subsidiaries, so that will bolster us. But it's going to be a slog this year, I think.
But we are seeing increased consumer spending. So would you think that that would kind of play into increased demand for business loans?
Our business loan pipeline, I know nationally it's not overly that strong. Ours has been incredibly strong for at least, the past. It has not slowed down. So we have a really strong pipeline, but we are more atypical in that than what's going on nationally. Absent some, successor to Omicron, I think the economy is poised for a lift, even counting supply chain things and labor issues. I think we're still poised to do very well economically, at least in our market.
In terms of the year, I also want to bring up your investment performance on your portfolio. Talk more about that.
Sure. We have about a $460 million investment portfolio, and that's where a lot of the excess liquidity that's come down from federal stimulus and PPP. We've had loan growth, but the excess has been parked in our investment portfolio, and we do very well there. We're in a 3-year average. We're about in the 94th percentile of all the banks in the country from investment performance, and we always reside in that top decile. So I think that's a differentiator for us. We do that well, done that well for 25 years, and we just pay a lot of attention to it, but it yields results for us.
I guess that's why you've been named for the 14th year in a row, one of the top 200 community banks, and for the 9th year in a row, the best bank to work for. So you must be pleased about that.
Correct. Yeah, we see the top 200 community bank is based on a 3-year return on average equity. So that's sort of perfect example of how we perform for our shareholders. The best banks to work for is really how we do it. We spend a lot of time on the human resource function, and we have this GPTW, great place to work. Through our employees is how we attain those higher than average returns. And so it's not rocket science, but it works for us.
Well, congrats again on this record year for you, Jeff. Good to see you. Thanks so much.
Good to see you, Christine. Thank you. Bye-bye.